today. Um, this session, the topic that we've chosen today. I know it's Memory Cafe has gone on for 3 years now, and we've never ever touched this topic. It's such a sensitive topic, so we had to find somebody really good to touch this topic, and I'm so happy that we are having it today because we've got the right guy to do it for y'all. Before I start, I'd just like to say that we'd be recording this session, and if you'd like to, replay if you've forgotten something or you want to discuss something with your children or something like that, something that was discussed over here, you can always go back to the session and play it back and review it, review the information that you have received today. So, how is everybody doing? All good? Have you all been doing Babita's exercise every day? Yesterday's exercise today? Everybody's quiet. Everybody's silent. Okay, I can see few faces just saying yes. That's it. Okay, but
you muted everybody, so how can you hear?
No, I can make out from your smiles only. Whenever I ask this question, I can make out from your smiles only whether you're telling the truth or you're lying. But anyway, okay, so I'm really happy to introduce Gavin to you all today. Gavin is, I would say somewhat of an all-rounder. He's so fabulous in actually mixing corporate with the heart. Corporate work with work which comes from the heart. Let me tell you a little bit about him. He's a financial advisor and an excellent financial advisor. And how I know about this is because around 8 months back, I heard a talk which he gave to all the couples from the Couples for Christ, formerly called Couples for Christ, now Missionary Families of Christ. And that topic on finance was so beautiful that it not only opened my eyes, it opened many of the seniors' eyes as well. Then I realized it's he actually goes against the saying, old is gold, or old wise and old, or something like that. Because he's so wise and he's so young. He has his own financial company. In addition to that, he mixes that work of corporate work along with environment. He does a lot of work for the environment as well, and he has own company which works with the environment for environmental basically restoration and stuff like that. In addition to that, he was the co-formator for the singles. Was it singles? Gavin, was it singles? No, it was the youth. Sorry, the youth. Yeah, co-formator for the youth for the couples of in the Couples of Christ or Missionary Families of Christ ministry. He and his wife. So he manages to basically just break the barriers right now, which we all face of being corporate versus having, doing justice to the environment or helping others and stuff like that. So I know that after the section, you're going to have a lot of questions. So I'm not going to waste much time and I'm going to put Gavin straight on. Gavin, thank you for being here today. We are all ears from now on for you.
Thank you, Sheldon. Good evening to everybody. I will just share my screen so then we can start with the presentation. So today we will be talking on financial planning for seniors. So this entire presentation has been optimized considering that we have seniors who are attending this session. So you all might have seen the poster which was circulated, and the poster had quite a number of points of what we are going to cover today. If you look at each of those points, they fall into various categories. And those categories are what we call as the pillars of financial planning. So what are these pillars? Number one is your investments, where you invest your money to work for you. Number two is your income planning, where you plan, yes, this is what I require for my day-to-day expenses. This is what I require for my annual expenses. Then insurance, which is protection against any potential losses, any unforeseen circumstances that could occur. Then you have your tax planning and you have your estate planning. So each of the points that was shared on the poster will be discussed under either one of these headings today. So let's go one by one, so we understand each pillar. First pillar. So let's take investment and income planning together. So very often when we want to make an investment, we want to renew a fixed deposit, we want to pay our next insurance premium, it is just sometimes a matter of habit. We make that check, we renew that fixed deposit, or we make that insurance payment, or we just continue with the very same mutual fund that we hold. In financial planning, it is very important that you go about in these steps. Number one, you assess your current situation. Now this investment which I am going to renew, or this brand new investment I'm going to make, what goal is it for? Is it a short-term goal? Is it a long-term goal? Because that will lead you to the possible actions. If it is a short-term goal, then you cannot put it in a particular product. If it is a long-term goal, you can choose a much better product that would deliver a much higher return for you. Then you evaluate what are those plans, what are those products, you implement it and you review it. For example, suppose it is a mutual fund which has a 5-year holding horizon. At the end of 5 years, you need to review, or you need to ask your financial advisor to renew and see, has it met its goals? Is it giving the desired results? So it is very critical that, before we just cut that check, we evaluate, we assess, we shortlist, and then we make our investment. Now, if you look at what is the major asset classes which are available. So we have equities, we have fixed income, we have gold, and we have real estate. So while there are various other categories, these are the major categories we have for investment. Equity is something for the long term. Then we have fixed income and debt, which is like your fixed deposits, your corporate bonds, and other kind of deposits which guarantee you a fixed rate of return. Then we have gold. Gold generally has been held in the form of physical form, but there is also a possibility of holding gold in an electronic form. When you hold gold in a physical form, you buy, whether it's the coins, whether you buy the bars, you have to remember that when you give it for making, say, a necklace or making any type of gold ornaments, there is melting charges, there is loss of gold. But when you hold gold in the electronic form, you know that there is no chance of robbery and you save costs in terms of you don't require lockers and these kind of making and breaking charges. And last is real estate, where you might invest in a property with or without a house, or a commercial place which you might give out on rent. So generally all your investments that you do follow in these 4 asset classes. So again, equities is your direct stock, your mutual funds, then your fixed income, which could also be your debt mutual funds, your fixed deposits, your corporate bonds, gold, and real estate. So these are the major asset classes that one invests across. So what are the options available for senior citizens? So because somebody is a senior citizen, there are schemes which are available where you get an additional rate of interest, which is generally beyond what a person less than the age of 60 would receive. So some of the major products which are also backed by the government is one is the senior citizen savings scheme. Senior citizen savings schemes is mostly sold through the post offices. It is for 60 and above. 15 lakhs is the maximum that a person can put. 5 years is the duration, and it is taxed, the interest. Then you have the Pradhan Mantri Vaya Vadana Yojana, that's the PMVVY. It is majorly marketed and sold through LIC. Again, it is 60 years plus, and it's an instant annuity plan. That means you put a lump sum, and from the very next month, you're able to get your pension. It is a 10-year period, and it is taxed. Then you have the post office monthly income scheme, where it is 4.5 lakhs per person, 5 years duration, and it is taxed. Then you have your senior citizen fixed deposits, which you have with the banks. And if you look at it, your senior citizens fixed deposits generally would pay a lower rate of interest than what the senior citizen service savings scheme at point number 1 and post office monthly scheme at point number 3 would pay. So if you look for a particularly fixed type of an income, that would be a rather better option for you than a senior citizen fixed deposit. And last is mutual funds. Mutual funds depends on your holding. If you're withdrawing for a mutual fund, up to 1 lakh of gains in a year is tax-free. So generally, if you have, say, a mutual fund from which you are taking a monthly income of maybe even up to 1 lakh of rupees, you will generally pay no tax. So if you look at what is the most tax efficient option, it is the mutual funds among all these options when it comes to tax wise. Now, when I spoke about the earlier products, I said this product is 5 years, this product is 10 years. So there are a lot of things to analyze when you're making an investment. Number one is your eligibility. What is this product? Am I eligible for it? Your eligibility will not only be in terms of your age. If you're choosing a particular product, are you choosing the right product for your right age at what you're making the investment? Are you trying to do a ULIP plan when you're a senior citizen? I mean, you may be eligible for it in terms of making the investment, but when you look at through eligibility, like, do I need this product? Do you really need it? So that's the eligibility. Then what is the rate of interest? So you compare across multiple products to find out which product gives you the best optimal rate of interest. There is some products like mutual funds, which should average over a period of time. There is a product like your senior citizens, which gives you a fixed rate of interest. So what is that rate of interest? Then the investment amount, both the minimum and the maximum. So what is that minimum amount that I can put in? And what is the maximum that I can put in? So now, for example, when you talk about senior citizen savings scheme, like a couple together can put in 30 lakhs because an individual can put only up to 15. So you need to check what is the best way I can optimize if I want to put an additional amount in that particular product. Then the interest payout. How do I require my interest payout? Do I require the money monthly? Do I require the money quarterly? What is that payout system that I require? Do I require a payout, one payout to come on the 1st of the month and one payout to come on the 15th of the month? Do I need my payout to increase every year to account for inflation. Because if I'm taking a payout of 15,000 or 50,000 or 1 lakh a month today, next year, it's going to cost me more to buy that same product. Because when inflation keeps moving upwards, the cost of my products also move upwards. So do I want a permanently fixed interest payout through the rest of my life? Or do I want to structure my investments in such a way that every year my payout moves upwards? Then the tenure. What is the tenure of my investment? For example, a lot of us sell property. When we sell property, we park that money in capital gain bonds. Now, capital gain bonds is locked for 5 years. So whether you have a medical emergency, whether you have any kind of emergency, under no circumstances will you ever be able to sell that bond and get your capital. You will have to wait for 5 years. But there are some investments where you can pay a notional exit load like 1%, 1.5%, depending on the type of investment and exit. So when I'm getting into a product which is locked in for 5 years, locked in for 10 years, do I already have surplus money at the side that should an emergency come, I can access that money? Or will I be caught up in a situation where I will not, even though I'm wealthy, having money in bonds, I'm not able to take out that money from the bonds. So tenure is a very important perspective. And not only from the perspective of lock-in, but also from the perspective of, do I need to take a ULIP plan now, which is for the next 20 years? Or a policy which is for the next 30, 40 years? So what is that tenure which I require? Do I want to put direct money into shares? But what is my tenure? How long am I going to hold it? So tenure is important both from the lock-in perspective, that I cannot get my money back under any circumstances for this amount of period, or from the perspective that, okay, if I invest money in this product, I need to give it a minimum of so many years to grow, even if it's not locked in, like a mutual fund. A non-tax saver fund may not be locked in, but I need to give it a certain amount of time to grow. So that is the tenure that you need to factor. So very similar, early withdrawal, emergency withdrawal. Now, for example, I need to make an emergency fund. Maybe say I don't have a medical insurance policy. So if I get admitted to hospital, what happens? So you need to choose that right type of a product. Like see, a product like a fixed deposit is able to be broken early by paying a penalty. If you put your money in a debt mutual fund, there is no penalty at all, but that can be broken very easily. So you need to consider, when I need to do an emergency withdrawal, where do I go to? Very important. What is that fund? Have I parked it in a savings account? Have I parked it in an FD? So very, very important is, what is my emergency fund? That this thing is called your emergency fund. So where is your emergency fund? Do I even have an emergency fund? So that's very important. And you need to see the tax implications. If I'm taking a pension plan, is the pension taxed? Is it not taxed? If I'm taking a withdrawal from the mutual fund, is it taxed? Is it not taxed? My fixed deposit interest, is it taxed? Yes, it is taxed. But you need to check out all available options to have the best tax optimization. Now, if you look at the various asset classes and the historical rate of returns, you can see what a mutual fund gives you, a real estate fund gives you, stock market, whether your term deposits, fixed deposits, gold, savings account. So if you observe, there is one column called expenses over inflation, because it is your whatever investment you do not only needs to give you a return, it needs to give you a return that beats your inflation. with an average inflation rate today of about approximately 6%, if you're earning anything less than that, it effectively means that one day you're going to eat into your capital. Because if inflation is rising more than 6%, your investments are giving you less than 6%. So eventually you'll have to start breaking your capital, right? Because the interest is not going to suffice. You'll start breaking your capital. So is your investment beating inflation? That's a very important question we need to ask ourselves. Otherwise, there will come a time when we will no longer be able to survive only on the interest. We'll have to start breaking our capital investments that we have made. So sometimes we have made a bad investment. How do we exit that? So very important is you need to have your original policy bond document, because that is a document that you need to surrender. Because sometimes people take loans against their policies and all. So if you don't have, your insurance company will assume that you have maybe lodged it for a loan and you're trying to default on something. So have the policy bond document ready. If you don't have these documents, insurance companies have a procedure by which you need to make a certain type of an affidavit, and then you get a fresh bond document. You request for the surrender value. Now say maybe you have taken, say, a ULIP plan, and you say that, okay, I don't think this is performing well enough. Have you asked for the statement? Ask for the statement. Contact a professional who can help you analyze. Is it not worth continuing? Okay, if I put this investment somewhere else, will it be beneficial? So you request for the surrender statement and analyze. If the outcome of the analysis is surrender, you take the surrender form, you attach your NEFT details, generally along with a cancelled check, and they ask you for your KYC documents like an Adhar Card, PAN card, and you're able to exit this investment and put it to something which has a much better yield, a much better return. Moving to the next part, which is insurance, which is the third pillar. We have the family, you have motor, you have travel, and you have office, shops, and homes insurance. Family health policy is a very important. Medical policies are just, medical expenses are just escalating like anything. About 4 months ago, my dad was admitted to Manipal. He was there for about 4 days. The bill came to roughly 1,95,000. So the costs keep escalating. And prior to being admitted to the hospital, he did some tests of almost 50,000, 60,000. And after he got dismissed from hospital, again, tests and whatever came to another 1 lakh rupees. Now, we were fortunate that we had a medical policy. And since it was cashless, whatever there are certain things that insurance companies don't cover. So whatever was not covered, we had to pay at the hospital. The balance from 195, almost 1,70,000, 1,80,000 was paid for by the insurance company. And because the policy had the feature of expenses pre-admission and expenses post-admission, we were able to get that 50,000 rupees reimbursed, and we were able to get almost the entire 1 lakh which he incurred even after exiting the hospital reimbursed. So that is the importance of having a medical policy and having the right cover. Very often, some of us have a policy, 1 lakh cover, 2 lakh cover, 1 lakh, 2 lakh cover will not even last you 2-3 days in the hospital. So what is that cover? Then you have your motor insurance. It is very important that even if you decide, okay, I am not paying for my own damage, you pay for your third party. Because if there is an accident, it could land you in major financial hardships if there's a claim from a third party. Travel insurance, very often we travel abroad. Travel insurance is very important that should we get sick abroad, you are able to get reimbursement for the same. And last is your office, shop, home, to have an insurance for these places. So in case of a fire, you're able to get appropriately compensated. Let's focus on health insurance. When you look for health insurance, number one, look at the age criteria. Up to when can you renew this policy? Is it renewable for lifetime? Check that out. Look at the right combination of premium and coverage. Sometimes people say, no, but I'm getting so and so insurance company for so and so amount, and I'm getting that much cover. Why is this more expensive? Please check. Is there a co-payment where the insurance company has written that we will pay 90%, you pay 10%, or we will pay 80, you will pay 20. Check that. Then check the room rent. Is it defined that, okay, only 1% of your policy can be the room rent? So if you have a policy of 1 lakh rupees, that means you can claim room rent of only 1,000. Whereas room rent in good generally hospitals are like 7,000, 7,500. So do you have the right room rent? And what are the sub limits? Is it said that, okay, for a heart related, you can claim maximum 2 lakhs. If it is a fracture, you can claim maximum. So look out for these things within your policy. Analyze your policy. Then waiting period. That, okay, for patients with certain amount of blood pressure, waiting period for so and so. If you have this kind of a disease, you have to wait for 3 years. What is the waiting periods? Cashless hospitalization. Is your insurance company able to tie up, who has tied up with maximum hospitals, so that you don't need to pay upfront and then claim? Then pre and post hospitalization, like what I explained of my father. His policy had a 30 days prior, 60 days post. So whatever expenses we incurred 30 days before admission, 60 days after admission, everything was covered. All those scans, x-rays, nerve tests, everything was covered. And no claims bonus. If I don't claim for this year, do I get a 10% bonus, 20%, 50%? What is that bonus do I get in my policy? Then preventive health checkup. Many policies have the feature that if you have this particular policy, you can do a health checkup every year, and the insurance company reimburses you to a certain extent. Do you have that? You may be having and not availing. Please avail of it. And what is the claim process? Look at the claim settlement ratios. Is my insurance company at least in the top 10 or top 5? Please look at that. Then we go for tax planning, that is maximizing your tax saving options. Under ATC, which could be your LIC policies, could be your mutual fund tax savers, your PPF, your 5-year tax saving fixed deposits. It's a maximum of 1,50,000 that you can put under this, and you will proportionately save tax as per your bracket. So if you're in the, say, 20% bracket, automatically, that means you will save 30,000 and so on and so forth. You're in the 30%, you save 45,000 and so on. And that is what you can optimize on. If you look in terms of the returns ratio, you will see that the highest return comes from a mutual fund tax saver, then from your PPF, then from your FD, and last from your insurance type products. Then there is something called NPS. So generally people tend to enter this product before 60, but since it's one feature which is available, I said I'll talk about it. NPS is a maximum of 50,000. So you can build up the corpus and you can then start taking a pension from it. So NPS up to 50,000 you can invest. So again, same way, if you're in the 20% bracket, you will save 10,000 on tax and so on and so forth. For medical insurance, as a senior citizen, you're eligible for up to 50,000 rupees deduction in your tax returns. So that is under section 80D. And if you donate to any charitable institutions, government relief funds, other relief funds, cancer relief funds, that comes under 80G, providing that the trust that you have donated to has a valid 80G certificate, issues you a valid 80G receipt, and you should also essentially provide them with your PAN number. The donations are above the threshold. So these are the main sections of tax saving. And last but not the least, and a very, very important thing is estate planning, which is the distribution of your assets after death. Death is the topic that everybody is very, it's a very taboo topic. People don't want to talk about death because it brings along a lot of, sad feelings, but it's very important because we need to plan the passing down of investments from one generation to another. And how do you do this? How do you ensure the easy transfer of assets? One way is to have a will for the assets. And for this, it's very important you talk to your lawyer. Why? Like, for example, if you're in Goa, the Portuguese Civil Code applies for people who are born in Goa, your marriage is registered in Goa. In different other states, there are other rules. So specific to certain conditions of your birth, of your marriage, will change your will. Because then you cannot, now suppose you're in Goa, you cannot say, okay, now there is this child and I'm going to exclude this child completely from my will. And this child, I'm going to give everything. So it's not possible. Because like in Goa, under the Portuguese Civil Code, there is like certain disposable quotas that, okay, you can give extra, but you can only give it to this certain extent. You cannot exclude somebody. So it is very important to sit down with a proper lawyer who will be able to tell you, okay, where were you born? Where was your marriage registered? Currently, are you already widowed? How is the current distribution already that is there? So it is very important to have a proper conversation with your lawyer after you list down your assets. Because it's very important that you list that, okay, I have this plot of land. I have this home. These are my shares. Because you have to remember, while you put nominations on fixed deposits, bank accounts and mutual funds and demat accounts, in the legal perspective, nominees are only caretakers. They are not someone who's entitled for that money. They are caretakers of that money. So very important it is to keep a will. Ensure consistency of names across documents. If you're in India, is your Adhar, PAN, are all the names on these documents tallying? If not, it is better to tally it. Tally the name. Get your name on your Adhar, your PAN, your bank accounts, your investments, all in the same way. Otherwise, later it creates a lot of problem. Like there was a client of ours who recently passed away. So while his PAN and Adhar had proper name, when he passed away, his successors put that entire long Portuguese name on his death certificate. So now when they had to transmit funds and other things to them, they had to make a series of affidavits. They had to get diversion certificates because the name changed, right? While the first and last name was same, there were so many more middle names that got added. So have you checked your Aadhaar, PAN, bank, mutual fund, shares, FDs, ULIPs? Is the name the same? If not, please do your name correction. Start name correction on your Aadhaar, because then you can use your Aadhaar to correct your PAN, and then you can use your PAN plus your Aadhaar to correct your bank accounts, to correct your investments, and correct your KYCs. So start with Aadhaar if your name is wrong. If you have multiple names, your marriage certificate one name, birth certificate some other name, Aadhaar another name, please consider, like in Goa, they call it divergence certificate, where you say, I, Gavin D'Souza, also known as Gavin O.J. D'Souza, also known as Gavin Octavio Joseph D'Souza. So you get a divergence certificate where you'll have to give the department all the various certificate copies where different names are there, and they give you a divergence saying this is one and the same person. Get that certificate done. Then check your nominations. Now, say for example, I am Gavin Octavio Joseph D'Souza as per my PAN and Aadhaar. If somebody puts me as a nominee as Gavin D'Souza, while and in the unfortunate demise of that person, I will have trouble because they'll say, no, as per KYC, Gavin D'Souza is different and Gavin Octavio Joseph D'Souza is different. Now prepare this affidavit saying that I, Gavin D'Souza, also known as Gavin Octavio Joseph D'Souza, and so on and so forth. So please check the nominations in your investments. And one thing we always tell our clients is, please try and make your nominations match the PAN card of your nominee, because that PAN card is a very important document when transmitting your investment to the nominee's name. And last but not the least, and very important, is you ask yourself the question that if I pass away, do my family know where what is? I might have made some FD with Shriram Transport. I might have done something with Bajaj. I have done some mutual funds with some agent. I've got some shares, but is it together in one place? Or do you have a summary? Do people know where this is? So it's very important to have a financial records documentation. I will provide you all with a PDF file which you all can print out and record your financial assets. But let's go quickly through that so you'll understand what the file is about. The file will carry what is your details, what is your passport, what is your driving license, and other critical, what's your Adhar and other critical details. It will create your advisors. Who is my doctor? Who is my financial advisor? Who is my life insurance agent? What are those numbers? So then your family can contact them, because it is the duty of an advisor to help a family during this kind of crisis and help transmit it to the next person. And who is my life insurance agent? Who is my health insurance? Maybe in the hospital and your family has no clue what is the policy number. Who is this agent I need to get in touch with? All details in one small spring file. And my bank details, which is the bank, which is the address, what is the customer ID. Same. So for example, now this bank details, if you have two accounts, if you have 4 accounts, take 2 printouts of this page and fill in all the accounts. So as many as you require, you take those many number of printouts. So you have one consolidated view. Then lockers, PPF. There is an estimate across PPF, LICs, and other financial instruments. There is an estimated, as per one article, over 80,000 crores of money lying, because nominees and people themselves don't know, right? That their person had it. Because if you're a nominee, nobody's going to contact you, because nobody takes the nominee's phone numbers. It's not a compulsory field. So nobody knows, and nobody's going to contact the nominee. So please consolidate your details. Then your debit cards, maybe your credit cards, maybe some prepaid cards. Then your insurance. What is these life insurance policies that I have? What is the name? What is the frequency? What is my pension details? Because very often families need to intimate, whether it's the government or a private company, this person has passed away. So either the pension stops or a different type of pension, family pension comes, those details. And what are my investments? I may have a demat account. Some people open demat accounts on these apps. Nobody is going to have a clue that you have an app with some demat account there. So what are those demat accounts that I have? All those details. Then your investments. What are the mutual funds that I hold? What is the folio number? Who is the distributor who has sold it to me? Then your real estate, listing down all your properties. And finally, your will and legal, as to who is your executor of the will. Who is the name? Who is the contact? If you have any people, power of attorney. So everything can be documented like this. So it is very important. So what happens once you go through this exercise, you fill in all these fields, automatically you already have your data also ready for your will. So when you show it to your lawyer, you have everything ready. So I will circulate this PDF file through Sheldon. I strongly request everybody to remove a printout of the file, fill in all your details, and keep it in a central place where, in case of your death, somebody will be able to access it. Or even if you have to keep it in a locker in your thing, you can keep it, because you'll know that this file is the first thing someone will find. And when they find this file, they will know everything. So it is very important that you record the assets that you have, because your assets are either inherited Your assets are assets that you have built through hard work, sweat, blood, and it should not go to nobody. It shouldn't be hanging in the air. So please follow these steps. I would urge everybody, once this presentation is done, you check your PAN, Adhar. Are my names matching? Check your bank account, check your mutual funds. Is my name matching across? Start with that. That should be your starting point. Because that is where we have seen people getting stuck greatly post the demise of someone. And instruction should be clear right to the extent where you say that, in case I pass away, please ensure my death certificate is as per the name on my PAN and Adhar. So it has to be to that extent where instructions are given. With this, I believe there will be smoother sailing for the next generation, and it would be much easier, and the people won't have to, first of all, people are already in mourning at that point of time and then running around, to do all this kind of unnecessary paperwork, which can be avoided. Please do that. With this, I will end my session. And if there is any, questions, I will be happy to take. Thank you.
Thank you, Gavin, for that. I'm sure everybody has questions. And I know that when the session ends, I know that I'm going to get a lot of phone calls for that PDF document. So don't worry, everybody, I'll circulate it on the Magic Monday and the Super Seniors group. Anybody has any questions? One question that I have, Gavin, is for an emergency, what is the best fund to break in an emergency? Suppose you have to go to the hospital and you need immediate cash. What is the best fund to break without any stress?
So ideally, if you look at an emergency fund and if you're looking at something without stress, it would be rather wise to pick a bank which pays you a higher rate of interest, and you only leave that emergency money there. For example, there are some banks which pay you 6%, 5.5% on savings account deposits. So you leave the money in that bank and you say that this bank is my emergency fund, and you don't touch that money for anything else. So that would be the quickest way, because that can be withdrawn through ATM by debit card. The next option is, if you have a little bit more time, would be a short type of a debt fund, which are called liquid funds. That would be your next option. But the most optimal option at this point of time would be a high yielding savings account.
Thanks, Gavin. And what would be the amount, considering that we are keeping it in an emergency for like hospitalization and all? What is the front, when you go to the hospital, suppose casualty or whatever, what ideally you should have for a good hospital?
So I would say, like, if somebody does not have their medical insurance with them, I believe that if you, I mean, looking at the kind of general claims and all that we have settled for our clients, like most claims have been in the range of, say, 2 lakhs to about 7 lakhs. So considering a general type of admission or non-specific long-term disease, I think 5 lakhs is something which should be minimum kept aside for medical expenses, assuming no medical insurance.
Sure, thanks. Anybody else has any other questions? You can unmute yourself and just freely ask Gavin.
Hello, can I ask?
Yes.
For income tax evaluation, is the husband's income and the wife's income taken together and evaluated, or I pay separate, he pays?
Are you, your marriage is registered in Goa?
No.
So there is commutation of income. There are again categories where generally, like, if your marriage is registered in Goa, then you're able to get it separated. I mean, you're able to join the incomes together.
Oh, otherwise you're not allowed to join.
It depends on the state, like, so you will have to let me know what is your state where your marriage is registered. Is either of you all born in Goa?
No, not born in Goa, not married in Goa also. We married in Bombay.
Okay, so generally commutation of income is one of the unique features of Goa, where husband and wife can be added together.
Because nobody is sure about this when I had asked.
No,
They-
it is commutation of income is, and if you're under the Portuguese code, if your marriage is registered in Goa, you can get that done.
Ours
And
is
that
not,
one spouse should have been born in Goa.
not born, not married also.
No, then it will not be. So there was also some articles which said no, that like even the country as a whole was considering adopting points from the Goa Portuguese Civil Code, because many points made a lot of sense, including the distribution of assets and commutation of income.
And what about this uniform civil code? Doesn't apply to these?
No,
A
uniform
uniform-
civil code, this part is not this point is not, commutation is not a part of the uniform civil code. So they wanted to amend the uniform civil code. So when this proposals for amendment came, they were constrained lifting some things from Goa, but I don't think the amendment has gone through. It was still in the draft stage at the last time when I checked. But I can go in detail and I will get back to you specifically.
Okay. Thank you.
Welcome.
Can I ask something?
Yes, please.
Gavin,
I wanted to know, like, previously marriages were not registered,
Yes.
right? Yeah, especially I got married in Maharashtra, so there was no registration compulsory at that time.
Okay.
So is anything to be done to, or is it acceptable? Because at those days, marriages were not registered. Or is there something that we should do to get it registered?
So for marriage, then currently what proof is there from the church? You'll have your certificate.
From the church, yeah. But the thing is, the date of births don't match and the spellings don't match. So it will not match with the investment details. Because
No, but what about your Adhar and PAN?
Aadhaar and PAN is there. All are proper.
So you match your investments at least to your Adhar and PAN. Your KYC at least should be in place. And you can make a divergent certificate for the different names.
Okay. Okay, but where all does a marriage certificate come into play?
Where
For
did you
this,
say you got
for-
married in?
In Maharashtra.
So generally what happens now is when there's a term of when inventory and all those things come about, that is the time all these marriage certificate and everything comes into play. So
Okay.
if you have an option of being able to register it, nothing like it. Because recently I've been talking to a senior citizen couple, they are like 85 and right now they are working on getting all those documentations done because they have properties and everything and they don't want the children to have any problem. So if there is a possibility of getting it registered, nothing like it.
Okay. Thank you.
Welcome.
Gavin, may I ask you something?
Gavin, what's your
Gavin,
Sorry.
Gavin, I'd like to ask you something.
Yes.
Maridan, yeah.
Yes.
See, you said something about a lifetime insurance. Is there medical insurance? Is there any company that offers lifetime medical insurance?
Yes.
Especially, yeah. Can
Yes.
you tell me the names of any insurance company?
See, so for example, Star Health offers. Star Health is a very
Okay.
good company. They offer. So it's like lifetime renewability. So earlier, like what would happen? There are some policies with some companies where they say renewable up to 70 years of age, renewable up to
Yeah.
60. So suddenly you pay till 70, then you realize you're not covered and nobody's going to cover you after that. So you have to look at that lifetime renewability.
Yeah, but the thing is, they can't tell you what by how much the premium will go up. See, what has happened is we have policies that we've been with this company for the last 30 to 40 years.
Okay.
New India. Okay. Then the premium keeps on increasing. Then by the time you reach 60 to 70 years, it's too late to shift to some other insurance company because nobody is prepared to give you a policy after that.
Correct. If you shift, you need to try and shift before 65.
Okay.
After 65,
But
then it's a very difficult task. We can try,
But then
but it's a difficult task.
When you try to shift even at that time, no, they tell you the premium that you have to currently pay, but they cannot tell you how much it will go up by the time you reach 70 and more.
So generally
They
what
don't
happens,
tell you.
government companies, they don't have, or maybe they don't want to share complete documentation. But when you look at the private companies, now suppose you want policy ABC, it says when you're in so and so to age, you will pay so much, then you will pay so much, then you will pay so much, then you will pay so much. You will be able to see the entire premiums that you will pay for the next whatever number of years, you will know in advance, because they give you a complete premium table. So you know that when you go into the next age bracket, how much you will pay. Everything is very transparent, very transparent.
With private companies, you
Yes,
think?
yes.
Okay.
I'm sure if you
Okay.
ask even your current insurance provider, please give me a table, they should be in a position to give you that table.
No,
But they don't
no,
give it.
I doubt whether, and it will be almost impossible for them to give
Gavin.
you. Because they don't know how much.
Okay. Then one more thing, Gavin.
Yeah,
See,
Gavin, I just like to ask you, what's your take on having an overdraft as an emergency, like for an emergency, and in times of emergency, an overdraft facility.
An overdraft facility is also a good idea, but you have to remember whatever money now, suppose you're taking an OD against your OD rate, it will end up being higher than what is your rate of return. So let me give you a simple example. Just for example, if your fixed deposit, if you're taking an OD against a fixed deposit, so say your fixed deposit is earning you 6%, generally your OD is at 7%. I would rather recommend you take like an OD against a mutual fund, because while your mutual fund is growing at a much higher return, your OD, you'll be paying a lower amount. So it still makes sense that, okay, I'm not breaking this mutual fund investment because I'm getting it at 12% is what I'm earning in the mutual fund, but I'm paying the OD only say 8% or 9%. So it's like that way, because OD anyway needs to be paid back, right? So for a person who is currently working, generally youngsters, we tell them you can take OD because you have fresh funds coming in month after month from your salary. You can repay your OD. So the question here becomes, how will you repay your OD? Do you have fresh money coming in from pension? Or from where does that money come to repay the OD? Otherwise, then you have stress of OD repayment.
No, it is, we're taking OD against equities and we only pay interest for the amount used.
Okay.
And if and when an emergency comes, we use the OD and then we have the time span to decide what exactly you want to dissolve or how much you want to dissolve later.
Yes, that would be the right move, because you're paying less on the OD, you're earning more in your equities. So that would make sense.
Okay, I have
Thank
another
you.
question, Gavin. Albert's finished. I have another question, Gavin.
Yes.
You said the nominee is only a caretaker and not
correct.
the owner of the account. But then why is it now of late, banks are insisting more and more that you give your nominee, I mean, appoint your nominee or nominate somebody for your account?
So what is happening is that because of the volume of bank accounts, unclaimed PF deposits, mutual funds, even now, if you have mutual funds, you will notice of late the mutual funds are also pushing for nomination, or you will need to mention that I don't want a nominee. So there are both ways. You can either say that I want a nominee, or you can say I don't want a nominee. They don't want that nomination field blank. You have to give a declaration saying that I don't want a nominee. Then they will not call you. So they will mark it in their system that the investor has said that they don't want to appoint a nominee.
Okay. Okay. Thank you. Thanks, Gab. Okay.
Sujita, you need to unmute yourself.
What is the procedure for the will that is registered? How do the family open it? Because an ordinary, which is not registered, we just keep it in the locker and they open it.
Correct. So generally
what is
what
the-
happens is either
Yeah.
an executor is appointed, like, so there is somebody who is a very, like, somebody has a very trusted friend or a very trusted family member. Either they leave it with that person or they seal it and they put it, say, in their locker. And they say that this is to be opened only on my death. So it is either it's a very close confidant where, like, for example, I shared that PDF file, there you mention this is the executor of my will. Or if there is nobody with whom someone shares that kind of such a strong, reliable relationship with, you seal that document and you keep the document in your own locker.
Gavin, sorry, there was a message asking where to get the divergence certificate from.
Yes, so I just replied, the divergence certificate in Goa at least can be applied for directly online. You can go to that Goa online website, make an account there using your Adhar number, and you can apply for the divergence certificate directly online. They'll ask you upload birth certificate, upload this document, that document. You can upload and you can apply for it online.
Hello.
Hello. My question is it necessary to make a will with a lawyer, or you can write out a will which will be valid on your death?
So, for this generally, I would, for this particular question, I might need to get back to you because, I haven't gone too much into unregistered wills. For now, we have only focused in terms of registered wills. Because what happens, handwritten will and everything, it is very, I mean that if there is somebody who wants to contest it, they can always say that it has been done under duress. So it becomes very tricky if there is a conflict with the next generation. Because I mean, there is no proof, right? And how difficult it is for somebody to forge a signature, for somebody to change that. It's not difficult, but when it's registered, there is a witness, then it has been put in the government records, then it's very accurate. And you cannot say that this was done under duress.
Okay, but the question is again, I mean, all your investments or whatever it is, some of them are fluid because you're taking out, putting in, shifting.
Yes.
So then all the time you have to update that in a registered will.
So what you would need to do, you would need to have it like, for example, now suppose you're talking about a mutual, you'll have to talk in terms of fluidic instruments. You cannot say my Birla mutual fund with this folio number. You'll have to talk about it in mutual fund. My mutual fund will be divided in this percentage. It means whatever is permitted as per your whatever you can allocate under your disposable.
Is not required. Sorry, the specification of the particular funds is not required. Just
no,
you can just say
overall.
Yes,
because it keeps changing.
Holding folio number so and so, so and so, so and so, so and so, but the amount is not required to be.
No,
mentioned.
amount is not required because like a mutual fund, a share portfolio would constantly change every day.
Yes. Okay. Thank you.
Gavin, you make a registered will and then you want to change it after some time. Is it possible?
That is tricky. You got to go through the process again of registration. That's the problem.
Yeah.
Because like that gets discarded and then again you got a fresh thing.
This is just done through a lawyer, is it?
Yes, it's done through a lawyer and the lawyer will facilitate the registration of the will.
Okay, thank you.
Okay, thank you.
Gavin, we have shifted from Bombay to Goa.
Okay.
And do we have to change the Adhar card on the will? Because Adhar card was done in Bombay. Now we changed it to Goa. Do we have to change it?
No, because your Adhar number remains the same, right? Your Adhar number doesn't change.
So it's not necessary? So it's not necessary?
No. Your Adhar number will never change, irrespective where you shift.
Okay, thank you.
Gavin,
Gavin.
What
a lot of people have been talking about this Lokmanya cooperative. Is it reliable?
So what you have to remember now is
for investment.
So when it comes to cooperatives, I just tell people this, that I want a loan. So I'll go to a public sector bank, which is an SBI and all, because they are the lowest. And SBI will tell me that no, you're not financially, your returns are not good enough, I will not give you a loan. Then I'll go to the next tier bank. I'll go to like a ICICI, HDFC and say, please give me a loan. They'll say, no, I don't think you're qualified. I won't give it to you. Then I go to a next sector bank. I might go to a scheduled cooperative bank, say like Citizen Credit. And they might say that, no, we don't think you're good enough. And then I go to a Lokmanya or I go to a bank, that kind of a multi-state type of cooperative bank. They take my returns and they will give me the loan. So finally, the question is, how comfortable are you keeping your money in a place where I have got rejected by SBI, I've got rejected by ICICI, I've got rejected by HDFC, Kotak, everybody has rejected me. And so what are my chances of paying back the loan? And if someone doesn't pay back a loan, that is how a bank collapses. So what is the strength? So you need to ask your banks things like, what is the default ratio? What is their recovery ratios? So personally, I do not have any money in any cooperative banks. Because you have to ask, like, how are they able to give such a high rate of return? Why is that, like in Margao, that Visionary Cooperative close, other banks close? Why are they able to give such a high rate of return? Because they give out loans at high rate of returns. And who is desperate enough to take a loan at a very high rate of return? Somebody who really requires the money, and there may be a chance that the person might not be able to recover it and pay it back. So it's a very tricky situation when it comes to cooperatives, because you need to be very sure. So currently, none of my clients, neither myself, have investments in this particular bank.
Thank you, Gavin.
Question.
Thank you.
In the case of wills and registered wills, if
Yes.
there's no conflict, there's no need of an executor, is it?
I'm sorry?
If there is no conflict in the case of a registered will, there is no need of an executor, is it? It does.
So, so this, again, this technical point, so that we are tied up with the lawyer who helps us with this kind of a process. So what I think we should do is, I will request the person
Don't
to
fight
get
over
me
it.
this clarification, and I will come back to you.
Okay, thank you.
Gavin, sorry, there was one more point that was mentioned on the chat about elaborating on electronic gold.
Electronic gold. So what happens, electronic gold is sort of stored in a, like how you have your mutual fund, or like how you have a recurring deposit. It is virtually stored. So for example, when I'm buying gold, I will be able to buy gold at the prevailing rate of what it is there in the market. So I'm not buying physical, I'm buying it virtually. And tomorrow I decide, now say for example, somebody is saving for a grandchild, or somebody is saving for a child. And that function has come, the wedding has come, or the baptism has happened, or the first Holy Communion has happened. You're able to sell that, and you'll be able to exactly buy that quantity of gold at that market prevailing rate. So you're not storing it. So you don't have to put it in the locker, buy those coins, melt those coins, lose money in the melting process. You save on all these costs, and you're able to buy gold at what the market price is, but it's electronic. Like how you buy a mutual fund, you're buying shares in Tata, shares in Infosys, same way. It operates in the same concept.
Sheldon, I think you had a question as well, right?
Yes. My question was, suppose you've got a medical insurance in Bombay, and now you have shifted to Goa. You're paying the premium and everything. Will it be valid for the Goa hospitals as well?
Yes, it will be valid for Goa hospitals as well, because Goa is definitely in a lower tier zone than Pune. But for example, now say you have taken a policy in Goa, you need to check whether if you go to Bombay, Delhi, is the policy valid there? In what sense? That if I go to Bombay, will the insurance company pay the entire bill, or because I'm going to a different location, I need to pay 20%, they will pay 80. Or I need to pay 30, they will pay 70. That is what you need to check. Now, suppose you are going from Goa to Pune, I would tell you check your policy. But since you come from Pune to Goa, Goa is in a lower tier zone. So there is no issue. But if it was vice versa, I would say, please go and check your policy.
What about a policy from Bombay to Goa?
In medical policy, no problem.
No problem.
Because Bombay again is in a higher zone than Goa. Goa is in a lower zone. Because all cities are put in zones. So when you go from a higher zone to a lower zone, it's okay. But moving from a lower zone to a higher zone, that's where you need to check that, does my policy cover all zones? Because you might not get all the treatment, no, in your particular state. So you need to check, does my policy cover all zones? Or do I need to co-pay?
Yeah, Gavin, I got another question. What about these, big names, LIC and stuff like that for encashment over there? Is there a special procedure? What are the documents required?
Yeah. So,
one is you yourself encashing. The other one is next of kin encashing.
So for next of kin encashing is not an issue because that's a nomination, and by virtue of these nominations or everything, you're able to encash it very easily because there is nothing further at play if the person expires. But if the person has not expired and you want to prematurely close, you have to go with that process where first you take the statement that this is my surrender value. Once you get the surrender value, you discuss with your financial advisor that, okay, this is my surrender value. It will also show how much you have paid. And then you, along with your financial advisor, will be able to make a decision whether should you encash or should you just leave it as it is or should you continue paying. But it's something that you can make a decision only after you get your surrender value statement. Then you can make a decision.
Gavin, and one more question. Suppose your who you nominate, you put a nominee is one name, and the will says another thing. What if there's a conflict like that?
Will hold
who gets precedence?
Will definitely the will. So in the very same way, even if suppose under Portuguese law now you're married in Goa and everything, and you have put all the nominee as one child everywhere, and you have put only one child in the will, or there is no will, the other child can directly contest it. Just because you have put the one child as a nominee saying 100% to this child doesn't mean the child can claim. If among siblings, okay, everybody's okay and says, okay, maybe the sibling was not well off. That's why our parents put it, the sibling, let them keep, then there is no issue. But someone can very easily contest it.
Gavin, sorry, going back to the question, the point relating to the co-op banks, just wanted to check the recovery and default ratios. Are they published? So are they easily viewable?
Yes, these are cooperative banks, right? So they will be coming out with their financial results. There they need to mention what is their ratios and all those kind of things. So I can also circulate a list, like, so for people who are majorly invested in cooperative banks, I can circulate a list saying that what are those ratios that you need to look out for, or you can ask your bank for, like, whoever has made these fixed deposits for you, what is it that you need to look out for in the bank? Because all banks publish these results, all publish these ratios. So what is that? I can share those ratios also, which one needs to look out for to know what is the financial stability of the bank.
Okay, I think Sheldon, I think we could probably, if there are no more questions, you can take on from here.
Anybody has any questions more? Any more questions?
If there is any personal or private questions, I will share my number with Sheldon has my number. You all can directly give me a call and you all can ask me those questions. If I don't have the response, like anything financial related and all is something we do every day. Wills related is somebody who we have a tie-up with. So if there is any questions in that, I might take time to get back to you. But finance, your investments, your returns, your taxation, those questions, you all can directly ask me, and that is something that I'll be able to give you an instant response to. Only legal perspective, because will, the permutation, combinations, and the laws that apply in your state and all is so different. We have a tie-up with a lawyer for that. So that is something I might take time to get back to you. But the rest is available directly with me. So Sheldon, if you could please share my number, then I will be able to address if anybody has a private question.
Sure, I'll surely do that, Gavin. That your number along with your PDF, which you're sharing with everybody.
Yes.
Let me tell you that Gavin, he did this session for the MFC as well, where he shared the PDF, and that actually encouraged me and Maria to be more cautious and more, to get everything streamlined with regard to our finances. Now at least either both the partners, they know the other person. If even normally in a relationship you have one partner who deals with the finances and the other partner who's deals with something else. We've each given roles, but unfortunately it might happen that the other person is clueless when in an emergency. So this, at least, once you have the documentation right and it's kept in one place, the partner who is unaware of what's happening, unaware of the finances, it's an easy reference system for that partner, in that emergency time. So thank you so much, Gavin, for this session. I'm sure everybody enjoyed and has taken so much of knowledge. You've got so much of knowledge. Thank you for giving your time. And God bless. And thank you so much. I can only say that much. Thanks. Thank you, Gavin.
Thank you, everybody. Thank you.
Thank
you
you.
Can unmute yourselves to thank him as well.
Yeah, you can unmute yourselves and thank him.
Thank you,
Thanks,
Gavin.
Welcome.
Thank you, Gavin.
Thank you, Gavin.
Thank you, Gavin.
Thank you very much, Gavin.
Thank you, Gavin.
Very informative.
Thank you.
Thank you, Gavin. This is Maridel here.
Yeah. Yes. I recognized you. Yes.
Thank you, Gavin.
My pleasure.
Thank you, Gavin.